Gang, 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 gang. We out here with a little technical analysis. We gonna run this. We need it for the journal. We need it for the whatever. What's today's date? Today is April 21st, 2024. We are gonna be looking at the S&P 500 to start. I already have a little bit of analysis running, but let's get into it. Yeah, shall we? We shall get into it. First of all, let's look at this beauty. The beauty. Look at this bearish activity. Let me go ahead and pull out what do we want to pull out here? Yeah, we'll just pull this out. You see, bearish activity, okay? We're very bearish. We've been bearish since around here, which is like the beginning of April. Specifically, we have been bearish. Very bearish. Of course, the one and only April 12th, which happens to coincide with what? Iran, Israel conflict. We all know the story. World War III, blah, 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 blah. We're not here to talk about this shit. Anyways, we're here to talk about the technical analysis of the S&P 500. Okay? Okay. What do we see here? We're on the 4-hour. As you can see down there, we're on the 4-hour time frame here. We are clearly still bearish from last week and the week before that. What I did first, obviously, is I set out from the highs to the lows, the Fibonacci 50% equilibrium there. And if we take a peek, I set this fair value gap was set off of the daily, actually, so let me just pull that up right quick. As you can see, right at equilibrium at the 50% line, which is right here. Let me pull up if it will freaking let me. We've got this, okay, this fair value gap on the daily, right here at the 50% equilibrium line, after we've had quite the retracement, I'll call it, the pullback, the dip, whatever you want to call that, quite the dip. In fact, this dip is, this dip is looking to be about a 7% drop, almost, nearly a 7% drop off in about 2 weeks from the all-time highs of the S&P after a massive run-up from over here at the end of October all the way up here to March. End of March, we've had quite a run-up. On top of that, let's go back down to the 4-hour, and let's kind of just take a look at what we're seeing liquidity-wise. Immediately, what I come to see... Okay, this is being gay. Excuse my... Sorry for cussing. Why is my computer frozen? What the hell is going on here? Hello? Oh my gosh. What the fuck is going on with this shit? Okay, geez, bro. Talk about bullshit. One, we got this liquidity level that never got swept, but we do have this liquidity level that did get swept right here. So we swept some sell-side liquidity, but we do have some existing liquidity still unswept over here, right there, at 4922.9. I would be unsurprised if during the beginning of this week that gets swept. Personally, I think we're going to continue the bearish trend, but I think what we're going to see first is potentially some retracement back upwards, because just how much downside we've had. I think there's potential that we come sweep this liquidity, maybe we come and sweep this liquidity, and even potentially, which I really think would be the best potential for a good quality setup, is sweep that 5089.9 level of liquidity, tap into this fair value gap here, run to the equilibrium of this Fibonacci retracement here, and then we continue down from there. I think that would be the most ideal. So if we drew this out, it would be something like, I think maybe we go sweep here, and then we kind of just run. And this may take more than this week, which is why it's kind of, because that's a pretty big move up, but then we, after that, we want to come down. That is a potential. I could see that happening. I don't think it would be that improbable, actually. I think it'd be potentially what happens. Now, we'd have to watch kind of, what happens in these liquidity ranges when we start running up. But personally, I do think that we will sweep, because this level here, this sell-side liquidity level here is also a daily. So we potentially sweep that, sit around on Monday and Tuesday maybe, then we start to come back up slowly here on Wednesday, Thursday, and then maybe by Friday, Thursday or Friday, we're tapping into the fair value gap, and then we continue on downwards. So I think, honestly, my hypothesis this week, my gut is telling me that it's a retracement week. We're going to kind of run back up before we continue this bearish trend. But again, that's only a hypothesis. Contingency plans. Okay. The contingency is really not much different, just bearish. I think maybe what happens is, honestly, I don't know about this 4-hour daily sell side liquidity level. It could be early in the week or it could be the end of the week. So if the contingency maybe is that price needs a little bit of retracement, but only sweeps maybe this level or even this level here, and then we kind of just run and we sweep down to this level. I think that's another likely scenario that could potentially happen. So let me mark that. This could be a target. If we're very bearish, that could be a target for sure down here. Now, I think that's less likely than seeing a bullish retracement this week, and then popping into that fair value gap up at equilibrium. I think that makes more sense. I think sweeping sell side liquidity on a daily level will fake a lot of bearish people out, take out a lot of buyers that have their stop losses there, and then we'll run upwards, having the market once again convinced that, oh, maybe the bull run is back. And then we tap that fair value gap, we balance out at equilibrium, we create some liquidity on the way, and then we continue downwards after that. But Monday, it's going to be a slow Monday, I think. There's no news. It's going to be really slow. I personally think this is when sell-side liquidity is going to get swept. And I think because it's a daily and a high time frame liquidity level, it's going to just kind of chill out. Usually what happens, in my opinion, when bigger liquidity levels get swept, they hang around, price hangs around there for a bit before making big moves. So I think Monday, we sweep that early, and then we kind of just hang out around that sell-side liquidity level all day, maybe even Tuesday as well. Going into Tuesday, we got 2 red folder events. That's not really too much. I mean, it'll make the market move, and that's where I think it will start taking out liquidity levels. It will start moving a little bit quicker. But we also have red news on Thursday, unemployment claims, advanced GDP. So again, I think Monday, chill out. Tuesday, we get a little bit of movement. I think maybe that could be the fake move, along with possibly Thursday morning, all of these red events. And then Friday, I think, is where I think we get a TGIF setup. Thank God it's Friday. Setup. Shout out to Jade Cap. Honestly, I think genuinely the plan that I've devised, the number one plan. I think it lines up with the news pretty well. I think we get a lot of manipulation on Tuesday and Thursday, faking out the markets. Potentially, the fake out, in my opinion, is running higher, coming to equilibrium, pretending like we're bullish. And then the final news event on Friday, these last 2 news events are going to be the real catalyst and the real move, pushing down potentially to 48.42 by Friday. I think that's what could happen. I personally don't see really a potential for going any higher than where that equilibrium's at. But I mean, I guess it could. So we could mark out, just in case, we'll mark out just one of the buy-side liquidity levels above equilibrium. Because there is, I guess, some small potential that price runs even higher. But that's a very large move. Like if we were to measure that out from where we're at. Measuring that out from where we're at. 4% in a week. 195 handles in a week. Yeah, let's be honest, that's probably not happening. I mean, if we go to the daily, or even if we go to the weekly here, like, look at the weekly candles here. So last week we had big bearish move. The whole candle is only 200. It's 240 handles. So I mean, if we get big movement, it's possible that we move. We get those big movements. But basically, what we would end up doing here, I mean, if you look at the weekly, we are beyond bearish. We just had strong displacement on the weekly. I highly doubt that we would see price go all, because that buy-side liquidity level I just marked out is 5174.8. That is the high of last week's candle. I highly doubt we create this strong displacement downwards, break of structure, just to come all the way back up in the same week or in the next week. Highly doubt it. I personally think what happens is we're probably going to sweep this weekly level, this weekly low, or daily. Then we're going to retrace a little bit of this candle. Potentially maybe not even this high, It may only be 50% of this previous weekly candle. Consequent encroachment is what they call that. If we wanted to see what that was, just right click. Damn, I'm using this freaking Apple pen and it is fucking with me. Consequential encroachment here. So the 50% would be a little bit below one of those 4-hour liquidity levels. So, I mean, the contingency plan actually looks pretty decent too. Either way, I genuinely think we're gonna be still bearish for the week. I think it will just play out as a fake bull reversal, and then we'll continue lower. Now, I don't know when or where that reversal will happen. I think it's potential that maybe Thursday is when we start tapping either into this level or this level. maybe even Wednesday, and then we start moving downwards. But I think that's pretty much S&P for the week. I'm going to be looking for shorts by the end of the week. Beginning, I probably won't trade Monday. Let's look at Tuesday. Tuesday, I probably will look for, we'll have to see what after Monday. But I will probably be looking for if I take a trade at all, I'll probably be looking for buys that are very low size and very low risk. If not, I'll be taking no trade. If price has swept some of these levels, I'll be looking for a trade. Like, if we sweep some of these buy side levels and we get the right price action, then I'll be looking on the 15-minute most likely for good setups. Just because I think this next week's going to be a pretty slow week after a huge move from last week. Typically, you're not going to see a whole bunch of movement right away again. I think we get a little bit slower of a week, and I think there's going to be good setups that you need to be patient for. So I'll be looking maybe for a buy on Tuesday or Wednesday, and then I'll be looking for shorts for the rest of the week after that, I think. But really, I don't think I even want to look for buys. I don't think I want to take buys. I think I'll paper trade a few buys just to see the setups, but the real trades that should be taken, I think, are going to be shorts towards the end of this week, and you just got to be patient for those. That wraps up my video. Hell yeah, let me know what you motherfuckers think. We out here. S&P 500. Let's get it. New week. Last week of April, I think. Yes, sirski. Let's go.